Everybody, this is Jim at SB500chart.com. It's about 1:30 here on Sunday afternoon, January 26th, 2020. We're going to take a look at the chart of the S&P ending on the 24th of January, and we had a little bit of a break of things here late in the week, so we've got something to talk to. Well, not talk to, I'm talking to you, but something to talk about. So, before we get started, let me remind you the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional, just a guy who draws lines on charts. So let's take a look. Looking at a 10-minute chart, tell you what, let's do that. Let's look at a 15-minute chart. Show the whole thing. We've been looking at a blue channel that had been operating for close to 3 weeks right here. Thursday of this past week, we broke underneath that channel. And remember, this was a short week because of the Martin Luther King Jr. holiday on Monday. So Monday and Tuesday we go sideways. We do set a new all-time intraday high on Wednesday, right there. Our all-time closing high so far was Friday a week ago. So we had that nice close on Friday, closed down a little bit on Monday, gapped up on Tuesday, slid back down to essentially a flat day. Then Thursday we broke underneath this line by a little bit, not a technically significant margin, and it looked like we tried to recover that position late on Thursday. Friday we gapped up again, gapped up to about 33.33, and then promptly started to head straight down for a loss of about 50 points. 33, let me make sure I said that right. 33. Yes, at one point it was about a 50-point swing after that gap up. Then we bounced on a little short-term line with maybe some indication that this is support. And if it is, what is the shape of it? We've seen a number of these before. We didn't see any of them for a long time. Then all of a sudden we started to see them starting, about a year and a half, 2 years ago. That's a descending, broadening pattern. That's indicative of people getting scared, people wanting out. And in this particular case, it's not a big pattern, but that is the shape that we see over the last 4 days. I would be more concerned about this if it were a broadening pattern that was facing up. That would indicate people are being very emotional about their buying. I think this is emotional selling, not emotional buying. Remember, the people that buy driven by emotion are usually the ones who show up at the tops. So, anyway, there is your week. It is a descending, broadening pattern. We are more than 1% under this line here, so this should be resistance at any point going forward. We are not quite at the lows of the day on Friday. We were not quite 1% under this line. So I think we probably will be at some point, but not yet. And we are very close to a line that I think we might, let's look at it on the hour chart so it doesn't get all screwed up there. Well, it's still getting a bit screwed up. Let's try a daily chart and we'll just really zoom in on it. Okay, going back to the lows in October, snapping a line from that to the lows in early December. That is that gray line right there. Perhaps that will give us some support. If so, we're really close to that line right now. There it is. So that is certainly something I think worth keeping an eye on as we trade this week. So basically what happened? Well, I don't know. People looked at that all-time high set last week and probably said, that's pretty sweet. I think I'll take some off the table. Remember, for markets to be healthy, they need to breathe. A market that doesn't breathe will soon die. And this is an exhale. Inhale, exhale. We're probably going to inhale again, which means this market will live. And remember, we've got two very significant targets, neither of which have been met yet. Even though we got up to 33.33, or actually 33.37 on Tuesday, our target is 33.70. We're not there yet. That's the target. So I think we still make that target. And of course, we got the big mama target that could be many months before we reach, and that is at 38.40. So guys, there is your weekly review in a nutshell. Keep an eye on this broadening pattern right here. If we get over this upper line, then that probably means the coast is clear. We're starting a new leg up. If we break down under this one, by chance, if that does happen, we got other lines underneath us. I really don't want to get down to test our neckline again, but it wouldn't be the end of the world, because in order to invalidate that big inverted head and shoulders pattern, we'd have to bust through that thing to a significant margin. So anyway, hey, there you have it. There's your weekly review for the week ending January 24th, 2020. Thanks for taking time out of your weekend to watch it. And as always, thanks for your very kind support. Take care.